Throughout history, Africa has been a continent rich in resources, yet its wealth has often been extracted and controlled by foreign powers. As the world faces unprecedented financial challenges, the question arises: could Africa finally reclaim its gold and, with it, its financial sovereignty? In this video, we explore the intricate dynamics of Africa's gold reserves, the ongoing struggle for control, and the potential shift that could redefine the continent's economic future. International reserves are the lifeblood of any economy, acting as a buffer in times of economic distress. For Africa, the issue of reserves is particularly pressing. The continent's reliance on foreign currencies like the US dollar and euro is a double-edged sword. On one hand, these currencies are crucial for paying for essential imports, everything from food to fuel. On the other, this dependency makes African economies vulnerable to external shocks, as seen in the recent debt crises that have plagued nations like Zambia, Ghana, and Ethiopia. These crises were exacerbated by a sudden reduction in Chinese lending, which had previously served as a lifeline for many African nations. With fewer new loans available, these countries were forced to default on their debt obligations, leading to severe economic contractions. In response, African governments are now rethinking their financial strategies with a renewed focus on building and controlling their own gold and foreign exchange reserves. Gold has long been seen as a safe haven in times of economic uncertainty. Its value tends to rise when other assets falter, making it an essential part of any nation's financial toolkit. This is particularly true in Africa, where several countries are increasingly looking to gold as a means of safeguarding their economies against future crises. But this is not just a modern trend. Africa's relationship with gold dates back centuries. Gold has played a pivotal role in Africa's history, from the wealth of ancient empires to the colonial exploitation that followed. Today, as gold prices soar, African nations are once again turning to this precious metal, not only as a store of value, but also as a potential stabilizer for their economies. But how much control do African countries really have over their own gold? Controlling gold production is a complex issue in Africa. While the continent is rich in gold, much of it is mined by foreign corporations such as AngloGold Ashanti and Barrick Gold. These companies have the capital and technology to extract gold on a massive scale, but their operations often prioritize profits for shareholders abroad, rather than economic development in Africa. This foreign dominance means that while Africa produces about 27% of the world's gold, much of the wealth generated from it leaves the continent. This has led to growing calls for African governments to take more control over their gold resources, both to increase their reserves and to ensure that the benefits of gold mining are felt at home. In addition to large-scale operations, Africa is home to a significant amount of artisanal gold mining. This sector, though often informal and semi-legal, plays a crucial role in the livelihoods of millions of Africans. However, the lack of regulation means that much of this gold is exported through illegal channels, fueling conflicts and depriving governments of valuable revenue. Recognizing this, some African countries are taking steps to bring artisanal mining into the legal fold. Uganda, for instance, has launched initiatives to purchase gold directly from artisanal miners, helping to boost its reserves while also supporting local economies. Similarly, Nigeria and Senegal have implemented programs to formalize artisanal mining, providing miners with the tools and infrastructure they need to operate legally. These efforts not only increase the transparency of the gold market, but also help stabilize the often volatile regions where mining takes place. Inflation is a persistent problem in many African countries, driven by a combination of currency devaluation and external economic shocks. In Nigeria and Ghana, inflation has reached record levels, eroding the purchasing power of ordinary citizens and causing widespread economic hardship. One way to combat this is by pegging a national currency to a more stable one, as seen with the CFA franc, which is linked to the euro. While this provides some macroeconomic stability, it also limits the monetary policy flexibility of West African nations and ties them to the decisions of the European Central Bank. Zimbabwe, a country notorious for its hyperinflation, has taken a different approach by introducing a new currency, the ZiG, which is backed by gold. This move is seen as a way to restore confidence in the national currency and reduce dependence on foreign currencies like the US dollar. However, the success of this experiment remains to be seen, as the ZiG is still in limited circulation and faces challenges such as potential devaluation and the risk of a black market emerging. If successful, Zimbabwe's approach could serve as a model for other African nations looking to stabilize their economies and strengthen their national currencies. By backing their money with gold, these countries could reduce inflationary pressures and gain greater control over their financial destinies. Is the West still a safe haven? For decades, African nations, like many others, have stored their gold reserves in Western vaults, trusting in the stability and security of these financial institutions. However, recent geopolitical events have shattered this trust. The freezing of Russia's $300 billion reserves and Libya's $70 billion reserves have shown that these assets can be seized if the West disagrees with a country's policies. This has sparked a growing realization among African leaders that storing gold in the West is not without risks. As a result, there is a movement towards repatriating gold reserves and increasing sovereign control over these assets. By doing so, African countries hope to protect their wealth from potential political risks and ensure that their reserves are used to benefit their own economies. Countries like Venezuela and Turkey have already begun repatriating their gold reserves from Western banks, despite facing significant logistical and diplomatic challenges. For African nations, the process could be equally complex, but the potential benefits, in terms of economic security and sovereignty, are driving this shift. The future of Africa's gold is likely to be defined by a mix of strategic moves aimed at increasing control over this vital resource. We may see the creation of sovereign wealth funds, increased investments in national infrastructure, and the development of intra-African financial markets. As African nations take more decisive steps to control their gold, the continent could be on the brink of a new era of financial independence. Gold, once a symbol of Africa's exploitation, could soon become the cornerstone of its economic revival. The decisions made today will shape the continent's financial future, determining whether Africa can finally reclaim its wealth and use it to build a more prosperous and stable tomorrow.